All right, hello and welcome to Camel Finance. I'm your boy Camel, and let's get into it, right? Of course, over the weekend, we have this whole Israel thing going on, but I think the too long didn't read is it's a buy the dip opportunity, right? It's a buy the dip opportunity. I wanted to point out a couple of things. I often say on this channel, I don't really like to take positions on a Friday. I don't really like to take on weekend risk, and this is exactly why, right? So even though we had some breakouts and some nice looking setups and some big green candles on the Friday, I said, we'll wait for the cycle lows. We'll continue to stick to the plan. And remember, as I often say, I don't like to take positions on a Friday. This is kind of exactly why, right? This is exactly why. But if you're wondering, how can this be a buy the dip opportunity? I'm going to show you, right? I want to ask you the rhetorical question. Show me a war that was bearish for markets. Okay? Show me one. You can't. And the reason is that humanity is disgusting. And frankly, here it is, right? Okay? You can see this Hiroshima. And what happened? Well, the market rips higher. Why? Because whenever there's a war, there has to be printing of money. Whenever there's printing of money, foul play has to occur and asset prices have to go up. So it is what it is, okay? It's a nasty situation. This is why I'm a Bitcoin advocate, because Bitcoin is an anti-war currency. But the facts are the facts. And whilst there is always an initial shakeout period, whilst there is going to be some, what's the word, volatility in the short term, I don't really expect this to be the end of the world, even though a whole heap of people on Twitter will be more than happy to try to convince you that this is it and it really is the end of the world. We've got another stacked week this week, as we've got the PPI inflation, we've got the Fed meeting, we've got September CPI inflation print on Thursday, OPEC monthly report, jobless claims, and a bunch of Fed speakers. So it's going to be a pretty stacked week. But remember, as we get to the charts in a minute, like none of this is really out of the ordinary, right? My last video that I put out over the weekend, I'll just quickly hop into this chart. I said, look, it's possible we've got an early cycle low, but it seems more likely that we're going to roll over one more time, hopefully get an undercut, but it could be a higher low or a double bottom. But hopefully we're going to get that undercut. And then from there, we've got a nice area on the chart to manage the risk around, and we'll take it from there. So far, nothing really out of the ordinary if you can just ignore the news and look at the charts. And again, something else I say a lot, right? Show me the charts and I'll tell you the news. Well, the charts said we had to roll over and make one more undercut, right? And now here we are with a bit of headline news that could possibly force the market to make one more low. Remember on Friday, we had the jobs numbers come out, and this could finally put a nail in the coffin for all those recession calls. You don't see recessions when employment is this strong. Yet under the surface, wages are coming back to earth, which is exactly what the Fed wanted to see. The fear was a strong labour market would equal much higher wages, but this isn't actually happening. This is not what we're seeing. So the question is, how are we going to have a recession when the labour market is this strong? Okay, this is not typically what you see in recessions, and it still continues to point me in the direction of believing we are going to see a face-melting rally into the end of this year. Now, the market has to prove that. Like I've been saying over and over again, we've got to find cycle lows, and then those lows have to hold. Okay, that's the biggest key thing for me. All the while we are above those lows, then I remain bullish. But if we find cycle lows, come rallying out of there for a week or two, and then roll over and undercut them, that's it. I become bearish, and I say that's it. We're not going to all-time highs this year. So we've got to let the market prove to me exactly what's going on. But overall, under the hood, I would say things look like we are set up for a nice rally into the end of the year. It's also really hard to see the Fed risking another rate hike with this whole new Israel thing going on. And we can kind of see that reflected here, right? We're still sat right under 80% probability that we're not going to see any more hikes. And again, if we're not going to see any more hikes, then the markets are forward looking. They're going to continue to try to reprice higher ahead of the inevitable cuts that are going to come. To further back up this point, we've got extreme bearishness, okay? This is the put to call ratio for equities. As you can see, massive, massive, massive spike at the moment. And when we look left and see previous times in history, what you can see is major upside rallies happened for the stock market, for the triple Qs, shortly thereafter. So is this time different? Probably not, right? Whilst we're looking at data, okay, the S&P 500 was down 7.8% last week from its July high. How high did the VIX get after the initial drop in the cases that featured an average total S&P 500 decline of over 27%? And when we look at this table, in every single case, after we had the same set of conditions that we just printed as of last week for the S&P 500, the VIX was down an average of 27% and a median of 19% in the months that followed. So again, this kind of suggests, doesn't it, that what we're going to see is the VIX come off significantly over the next few months. And of course, if the VIX is going to come off over the next few months, then wouldn't we expect to see upside from the stock market? Over in the world of Bitcoin, Bitcoin continues to look pretty good. exchange balances make a fresh year-to-date low. And we're also seeing whale outflows coming from Bittrex and Bitstamp. So we are seeing the big boys continue to accumulate and to continue to lock down this Bitcoin, continue to drain the supply. Of course, the more the supply is drained, the less money it takes to significantly move the price of Bitcoin. We've also got some nice news here from Costco, who made headlines last week after they announced they're going to start to sell gold coins at their stores. But they've now announced that you can buy Bitcoin using their Costco cash card. You can see down here, pay via Costco cash card. Pretty interesting time to be alive, in my opinion. Whilst we're talking about Bitcoin, remember this year to date returns, Bitcoin has continued to do Bitcoin things. Bitcoin has continued to smoke every other asset class, and this is a trend we are going to continue. I say this all the time on this channel. We also have the RPV ratio, the realized profit to value ratio, has just signaled a secondary bottom signal. Now, historically, whenever we've seen this before, what it tells us is we are not going back to test the lows. Those lows of around 16K for Bitcoin, the price is probably not going back there. It's probably not even going back close there. So again, it tells us to keep an open mind about higher Bitcoin prices in the coming weeks. We also have the weighted log Bollinger Band width down the bottom. Again, right in that neighborhood where you would expect to see major upside rallies for the price of Bitcoin. So something like this likely coming in the not too distant future, in my humble opinion at least. And this is a chart I show every now and again, and I will continue to show this chart every now and again, as this is kind of my exit strategy. I've been getting a lot of questions about what do I do? What's my plan for the exit strategy? How am I going to hide my money if there is indeed a big deflationary bust like I've been calling for? And a lot of people have been saying, oh, will you exit to this or will you exit to TLT? And to be frank, if this chart is to play out, this is the thing I'm the most interested in. This is Bitcoin priced in gold. Now, it kind of suggests that if we were to make a third trendline touch of this upward sloping resistance line, we would get somewhere in the neighborhood of 80 to 100 ounces of gold per Bitcoin. So remember, this is Bitcoin divided by gold. And if we were indeed to get a touch of that line, if price was indeed to do something like this, then in this neighborhood, I would be highly, highly, highly interested in exiting a large portion of my Bitcoin into physical gold. So I've said this a bunch of times before. I'll probably continue to keep an eye on this and suggest that this is possibly one very, very nice exit strategy for Bitcoin. But the chart needs to set up, the chart needs to prove itself before I can entertain actually exiting my Bitcoin into gold for the short term. And then we'll be looking for something like this, right, before we get back in and sell the gold for the Bitcoin down here. Anyway, one day at a time, but I like to bring this up every now and again. So here's a dollar, right? Still above this level, isn't it? Still above the horizontal, still above this upward sloping pink support line. Still looking for this to break down. But given where the cycle is for the S&P 500, it might not happen for a few more days. So keeping a close eye on this. As I kind of already said with this, we were expecting an undercut. That's what the cycle lows are telling us. And we possibly are going to get that, right? The futures are pretty red. The Dow pre-market is down. It's quite early as well. Like it's not even 9 o'clock UK time. So we're down almost 300 points pre-market. We're down almost a whole % for the S&P and 128 points for the NASDAQ. So to me, the charts were telling us this already. This has kind of just been confirmed now, hasn't it? And so have a plan and stick to it. That is still my plan, and I am still sticking to it. And it'll be the same with the NASDAQ and the Dow. You know, we're going to probably continue to do this, and then we'll look for an entry later in the week. But I do think that entry is coming. I am possibly going to have this oil short of mine pressured by this whole situation. But again, it still seems crowded to me that we're going to see $100 oil. I've seen that all over Twitter this morning. Everyone's saying, oh, this Israel thing means oil is 100% going to $150 a barrel. And I don't really see it. What I see is this first upward sloping support line, right? Breakdown, retest, resumption. And now of the second line, we've got breakdown, retest, looking for that resumption. So as long as we don't start to recover this trend line, then I would say this short will continue to be pushed by me. The last couple of things I want to show you, Bitcoin. Now, we could well continue. People ask me, well, what if Bitcoin does this? Okay, well, what if it does, right? I still have my first position. We'll just drag that across, and I'll be looking to add the crypto-related equities. But we are late in the cycle. The cycle is down. Does it have to come all the way down here? No, I don't think so. Could it look something like this? Yes, I would think that would be fine. But either way, like I've been saying, it's not the price I'm interested in getting Bitcoin at. It's the high probability setup and a nice area on the chart to manage the risk around. So again, have a plan and stick to it. That's what I'm going to continue to do. And I'll update you throughout the week as always. So that's it from me. Have a great week. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.